China says strengthened export control on dual-use items to Japan aims to curb remilitarization. Trump blocks defense company payouts until arms production speeds up. And S&P says AI to boost copper demand 50% by 2040. Good evening and welcome to the Economic News Bulletin. We start off with Europe, where a Bank of England survey has shown that British companies slightly lowered their still elevated expectations for wage and price growth, reinforcing the bank's cautious stance on interest rate cuts this year. Businesses reported expected wage growth of 3.7% over the 12 months from the final quarter of 2025, down just 0.1 percentage points from the previous three-month period. BOE noted that the firm's expectations for their own price inflation also edged down by 0.1 percentage points to 3.6% in the 3 months to December. Expectations for employment growth over the next year weakened slightly, while companies forecast consumer price inflation of 3.4% over the coming 12 months. Mortgage lender Halifax has reported that British house prices rose by a slower than expected 0.3% in the 12 months to December, the weakest annual increase since March 2024, as economic and tax uncertainty overshadowed the market at the end of the year. Prices unexpectedly fell in month-on-month terms, dropping by 0.6% in December after falling 0.1% in November. Data also showed that house prices in London dropped by 1.3% from 12 months earlier, while the strongest growth was reported in Northern Ireland, where prices rose by 7.5%. And over in the African continent, the Federal Ministry of Industry, Trade and Investment has reported that Nigeria recorded a $12 trillion Nigerian trade dollar surplus in the first half of 2025, as non-oil exports grew by 21% to 12.8 billion Nigerian dollars. Overall trade value rose by 14%, supported by improved export process, targeted trade reforms and growing value addition across key non-oil sectors. The ministry also added that Nigeria's special economic zones generated over $500 million in export revenues and created more than 20,000 direct jobs, reinforcing their role as engines of export-led growth. And in the tech sector, Reuters has reported that NVIDIA is requiring full upfront payment from the Chinese customers seeking its H200 artificial intelligence chips, hedging it against ongoing uncertainty over Beijing's approval of the shipments. It noted that the US chipmaker has imposed unusually stringent terms requiring full payment for orders with no option to cancel. The source added that in special circumstances, clients may provide commercial insurance or asset collateral as an alternative to cash payments. In the same vein, Bloomberg reported that China plans to approve some H200 imports as soon as this quarter. Moving to bilateral relations, where the Commerce Ministry spokesperson He Dong has stated that China's strengthened export control on dual-use items to Japan aims to curb Japan's remilitarization and nuclear weapon acquisitions attempts and is a fully justified, reasonable and lawful thing.
高市早苗首相涉台错误言论，侵害中国主权和领土完整，公然干涉中国内政，对中方发出武力威胁。高市首相上台以来，推进修订安保三文件，其侧近人士发表拥核言论，这是在试图挑战国际社会底线，暴露出高市首相和日本右翼势力一贯错误主张和持续推动在军事化野心，挑战战后国际秩序，势必损害地区和平稳定，危及世界。
And the Bank of Japan stated that regional economies are recovering gradually, with many companies seeing the need to continue raising wages, signaling optimism that could support further increases in the country's still low interest rates. The BOJ added that many firms plan to raise wages in the fiscal 2026 year at roughly the same pace as in 2025, reflecting strong corporate profits and a tighter labor market. Heads of the BOJ's Nagoya branch, Hirohashi Kamiyaguchi, said that there has been no severe damage so far, though many manufacturers and service sector firms expect potential impacts ahead. He noted that Japan's close supply chain ties with China mean some companies could be affected by China's export restrictions. The Ministry of Health, Labour and Welfare has reported that Japan's real wages in November fell 2.8% from a year earlier, marking the 11th consecutive month of decline and the sharpest drop since last January, as pay growth continued to lag behind rising prices. Inflation-adjusted wages dropped as a 3.3% rise in consumer prices more than offset a 0.5% increase in nominal wages to 310,202 yen. Food and energy prices have remained elevated, keeping real wages in negative territory for nearly a year, even as nominal wages have grown for 47 straight months. Nominal wage growth slowed from a revised 2.5% rise in October, dragged down by a 17% drop in special earnings. For further analysis, we're joined from Tokyo by fellow of the Hudson Institute, Satoru Nagao. Welcome, sir, for joining us, and thank you for joining us here on Qnews. So let's start off here by asking, how might China's export bans on the dual-use items like the advanced tech components affect Japan's manufacturing hubs like Nagoya, home to Toyota, for instance, given the close bilateral supply chain ties and firms' warnings of delayed impact on this?
In this case, what China is planning to do is not unclear because in the past there are many incidents, but always decision of China based on the politics. For example, when Australia asked the international community to investigate the origin of the COVID-19 crisis, and in this case, China imposed sanctions to Australia by delaying the process to import of the Australian products like the wine or the lobster. That has happened. But delaying the process is unclear economic sanctions. So that's why in this case, it is not clear when China impose such kind of sanction, or will it be the more clear one. Indeed, just now, it is not clear. But the purpose of the China that we can expect is indeed this is the test of the Prime Minister Takaichi, because the Prime Minister Takaichi's honest explanation for the Taiwan crisis could be the serious situation for Japan is just honest explanation, and it is truth. So Japan cannot back down. But view from China, this is exploitable situation, because if the Prime Minister Takaichi continues their government, in this case, China want to know the weak point of their government. So by using this remark, they try to use the pressure one by one and check the weak point of the Takaichi. And in this case, pressure to the businessman could be this businessman asks the Prime Minister Takaichi to concede something. So this could be the weak point diplomatically. And so in the later, China can use it the same card when China needs. So that's why this kind of test is very useful, and one by one they try to do that. And this time the businessman is the target. That is what is happening, I think.
Well, this also comes along with the BOJ saying or noting that wage increases have happened in the fiscal year of 2026, but they're not being offset because of the inflation rates as well. So it's nominal, and it makes a tight labor market as well happening there. Could this, along with the escalating tensions, exacerbate the import costs and pressures from the export restrictions as well as volatility of the yen? Could this potentially accelerate the price pass through by companies? And what does this mean for the average Japanese citizen as well?
In case of the price rise and wage rise gap, it's not a direct link with Japan-China relation, Japanese belief. So that's why even if this situation has happened, popularity of the PM Takaichi will not decline. Because indeed, making pressure from China is indeed rise the popularity of the PM Takaichi just now. Because PM Takaichi's explanation about the Taiwan crisis is just honest fact, and Japan cannot back down in this case. Despite this, China makes the pressure is unfair, Japanese belief. So that's why if the China make the pressure, Japanese will be a little bit upset silently and rise the support of the PM Takaichi. So rising prices is one important thing and problem for the people in Japan. But at the same time, still, these people do not wish the Takaichi to back down in this case, because truth is truth and we cannot lie. That is Japan's perception towards the Taiwan crisis, remark of the PM Takaichi.
Okay, now the BOJ's optimism, does it somehow on the regional recoveries justify the further rate hikes, or do risks from China-Japan frictions like the volatile yen move hurts exporters and warrants a more cautious normalization of the still low interest rate?
Indeed, this China's pressure to Japan is not so big impact as a reality, I believe, because we can remember what happened when the Western country imposed sanctions to Russia. Russia can get materials through the third countries. So if China try to restrict exporting the rare earths to Japan or other important material to Japan, what will happen is the two things. Well, firstly, Japan will get these materials through the third country, or there's a possibility Japan's factory in the overseas countries, in this case, they can get the material through this country, something like that will happen. So, indeed, the economic sanction is very difficult process to isolate the other country. So that's why when China make the pressure, yes, this is a pressure, this is not normal, that is true. But at the same time, can Japan survive? Yes, Japan can survive, I think.
Okay, so in what ways could China's pressures or controls framed as countermeasures to the Japan military build-up and the Taiwan rhetoric introduce a geopolitical risk that is premium, I suppose, into Japan's economic outlook? It influences a corporate investment as well as the inflation rates by the BOJ forecasts.
Yes, of course, this is a risk. But at the same time, this is a risk not only for Japan, but also for China. For example, even if they just restrict export rare earths to Japan, Japan cannot get the rare earths directly, but China cannot get the money too. So that's why economy is mutually beneficial. Trade is mutually beneficial. Stopping trade means that mutual damage. So that's why if China starts invade Taiwan, that could be the big impact, not only for Japan, but also for China. So that's why it is not an easy decision, not only for Japan, but also China. So that's why indeed, it is not easy. So that's why Japan should not overestimate China's pressure. Japan can survive, and because China want to avoid the damage for them.
Okay, thank you so much. From Tokyo, that was a fellow at Hudson Institute, Satoru Nagao. Thank you so much for your insights and thank you for joining us. And now we move on to the latest developments in the United States. The Labor Department has reported that the number of Americans filing new applications for unemployment benefits rose moderately last week, suggesting that layoffs were relatively low at the end of 2025, though demand for labor remained sluggish. Initial claims for state unemployment benefits rose 8,000 to a seasonally adjusted 208,000 for the week ending December 27th. Hiring plans dropped 34% to 507,647 last year, the lowest level since 2010. The number of people receiving unemployment benefits after an initial week of aid, a proxy for hiring, increased 56,000, a seasonally adjusted 1.914 million during the week ending December 20th. The U.S. Bureau of Economic Analysis has stated that it will use an average of September and November consumer price index data to estimate October inflation measures tracked by the Federal Reserve. For CPI components unavailable for October, the BEA will rely on averages from Bureau of Labor Statistics data for September and November in its October personal income and outlays report. CPI rose 2.7% year-on-year in November, down from a 3% increase in the 12 months through September. The Bureau of Labor Statistics was unable to publish full October CPI data after a 43-day government shutdown disrupted data collection. Treasury Secretary Scott Bessent has announced that the United States will immediately withdraw from the Green Climate Fund, the main climate finance mechanism under the United Nations Framework Convention on Climate Change, along with its governing board. In response, the UN climate chief, Simon Stiles, called it the move a colossal own goal, warning it would harm U.S. jobs, living standards, and the economy. He noted that as other nations step up on climate actions, this retreat from global leadership and cooperation will only worsen the impact of wildfires, floods, storms, and droughts. President Donald Trump has stated that he would not allow defense companies to buy back their own stocks, offer executive large salaries, and issue dividends to shareholders, signaling out one of America's largest missile manufacturers in his biggest target. In a series of posts on Truth Social, Trump blasted the defense industry for moving too slowly to produce great military equipment and criticized them for not maintaining it properly or quickly thereafter. Later on, in an executive order aimed at codifying the demand, Trump directed Hegseth to identify defense contractors that are underperforming and doing stock buybacks and offer them a chance to remediate the issue. To talk to us more about this, we're joined from Washington by the chairman of Links Investment Advisory, Peter Tanos. Thank you, sir, for joining us.
Nice to be with you, Riham.
Let's start off here by asking, how might President Trump's executive order restrict stock buybacks, executive pays, as well as the dividends for the underperforming defense contractors? Targeting these firms like major missile manufacturers impact the financial strategies as well as the ability to attract talent.
Yeah, this is really a strange and unusual move, but it's something the president can, in fact, legally do. he's basically saying that he doesn't want these companies to issue dividends or promote share buybacks, which obviously use the company's cash, until they are on time and on budget in the defense contracts. That sounds reasonable, but the company's first obligation is to its shareholders, so this puts them in quite a dilemma. On the other hand, it's something Trump can do because he controls the government budget.
Mm. So in what ways could Trump's directives towards the Defense Secretary, Pete Hegseth, identify, which he said to identify and remediate the lagging contractors to accelerate production for what he described as a great military equipment? What risk does this pose to innovation as well as the defense sector in the U.S.?
Yeah, I mean, the problem is that this only applies to the defense sector. I mean, we're basically talking about four companies: Lockheed Martin, Northrop Grumman, General Dynamics, and what was Raytheon. These are the four main companies that he's talking about. This is not something, obviously, the administration could do against other companies because in the case of the defense contractors, most of their business comes from the U.S. government.
Mm-hmm.
So obviously, Trump has a lot of leverage here, but it is an unusual move.
Well, you said he has a lot of leverage, and he has criticized these defense firms for being slow and poorly maintaining the equipment, and this was through social. How should the contractors somehow balance or remediate their plans while maintaining, shareholders' happiness, I suppose, amid this, heavyweight like Trump?
Yeah, that's a great question, Reham. It does put them in an unusual position, doesn't it? But remember, what Trump is basically saying is, we give you a contract, and what Hegseth is also saying, the Defense Department gives you a contract to build items for the defense budget. If we want, the contract will specify quality and time constraints on doing this. What we are saying is, if you violate any aspect of the contract, if you're late, if the quality is not up to standard, then we say, fix that before you do anything for your shareholders, before you pay them any dividends. Now, this puts the defense contractors in an awkward position because it's one thing to talk about share buybacks because the shareholders don't get any immediate benefit from share buybacks, but they do get benefits from dividends, and many of them count on those dividends, to help their family budgets. So it does put them in an unusual position, but there's not a whole lot the defense contractors can do about it.
Well, Trump is focusing now on the idea of creating war fighters, and he's even upped the budget of military spending, and now this move with these private sector military corporations. How does this broader signal of policy shift in the Trump administration about the defense industry affect geopolitics and, I suppose, a policy shift towards a more war-based U.S.?
Yeah, no, I don't think it has any effect beyond what we're just talking about. It doesn't imply any larger initiatives, nor does it imply any further action against other types of companies. It basically, if you take it at its, hold on one second. If you basically take it for what it is saying and doing, it is basically just addressed that efficiency in the Defense Department budget and efficiency in having these defense contractors deliver what they promised to deliver.
Okay, thank you so much. From Washington, that was the chairman of Link's Investment Advisory, Peter Tanos. Thank you so much for your insights, and thank you for joining us. And now we move on to the latest developments in the commodities sector. Iraq's cabinet has approved plans to nationalize operations at the West Qurna 2 oil fields, one of the world's largest, aiming to prevent disruptions from U.S. sanctions on Russia stakeholder Lukoil. The state-run Basra Oil Company will manage local staff, operational costs and subcontractor payments using an account linked to the Majnoon oil field. Supported by crude sales through state marketer Somo, production remains steady at 465,000 to 480,000 barrels per day. Oil prices rose on Thursday after 2 days of declines as investors assessed Venezuela developments and reports on the progress of proposed U.S. sanction legislation against countries doing business with Russia. Brent crude futures were up $1.21 or 2% at $61.17 a barrel. West Texas Intermediate crude gained $1.10 or nearly 2% to $57.09. S&P Global has stated that growth in artificial intelligence and defense will drive a 50% increase in global copper demand by 2040, while supplies could fall short by more than 10 million metric tons a year without expanded mining and recycling. While electric vehicles have driven copper demand over the past decade, S&P said future growth will increasingly come from the AI, defense and robotics sector, alongside steady consumer demand for air conditioners and other copper-intensive appliances. The group added that global copper demand is projected to reach 42 million metric tons a year by 2040, up from 28 million metric tons in 2025. Without new resources of supply, nearly a quarter of that demand could go unmet. The Central Bank of Jordan has revealed that the value of gold reserves reached a new all-time high of $10 billion by the end of 2025, with holdings totaling about 2.342 million ounces. The bank has also noted that foreign currency reserves rose to $25.5 billion, marking a new record high. This level is sufficient to cover the kingdom's imports of goods and services for 9 months. Gold slipped on Thursday as commodity index readjustments kept pressures on prices in the near term, with investors also positioning ahead of closely watched U.S. non-farm payroll data. Spot gold fell 0.5% to $4,432.94 an ounce. U.S. gold futures for February delivery fell 0.4% to $4,442.50. Spot silver lost 4.5% to $74.63 an ounce, while platinum was down 3.7% at $2,221.44 an ounce, while palladium shed 2.6% to $1,718.25 an ounce. And in the markets, the global stocks showed a mixed performance during Thursday's session, with collective decline across Asian indices. And in the US, the S&P 500 was slightly up at 0.04%, and the Dow Jones Industrial Average increased 0.59%, while the Nasdaq declined 0.56%. In Europe, the UK FTSE 100 was down 0.04%, while France's CAC 40 edged up 0.12%. Moreover, Germany's DAX hiked 0.02%. Asia saw a collective decline as the Shanghai Composite decreased 0.07%, Japan's Nikkei 225 dipped 1.63%, and Hong Kong's Hang Seng shrank 1.17%. That brings us to the end of our economic news bulletin, but before we wrap up, here's a quick recap of what we've been covering. China says strengthened export control on dual-use items to Japan aims to curb remilitarization. Trump blocks defense company payouts until arms production speeds up. And S&P says AI to boost corporate demand 50% by 2040. That's it for today's Economic News Roundup. Thank you for joining us. Stay tuned for more information ahead, and we'll be back with the latest updates tomorrow. But don't forget to follow Q News on YouTube, Facebook, X, Instagram, and TikTok using the handle @QNewsEGY to stay informed.